Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Papua New Guinea's OK Tedi copper and gold mine has suspended operations for at least 14 days, after 7 workers tested positive for the novel coronavirus, the mine operator said. The company said it had stopped production for at least 2 weeks, to limit further transmission and allow contact tracing, isolation and testing procedures to be implemented. Reopening would depend on the results of contact tracing, Wera said. The suspension, which began on Wednesday, is expected to cut the mine's copper output by about 4,000 tons and gold production by about 12,000 ounces, the company said.
Moving on to the top news in the energy sector.
U.S. crude oil stockpiles fell sharply last week as refining rates hit their highest since March, while gasoline and distillate inventories rose, the Energy Information Administration said on Wednesday. Crude inventories fell by 7.4 million barrels in the week to July 31 to 518.6 million barrels, compared with analysts' expectations in a Reuters poll for a 3 million barrel drop. Refinery utilization rates rose 0.1 percentage point to 79.6% of total capacity, their highest level since late March as the U.S. economy slowly recovers from the initial wave of the coronavirus pandemic. Refinery crude runs rose by 42,000 barrels per day, the EIA said.
We will now look at the top news in the agricultural sector.
Ukrainian Pro-Agro consultancy revised up its domestic 2020 grain harvest forecast on Thursday to an all-time high of 76.15 million tons from the previous estimate of 74.23 million. In a statement, Pro-Agro said it had increased its 2020 wheat harvest outlook to 26.59 million tons from 26.07 million and corn to 38.86 million tons from 38.49 million. The consultancy also increased its barley harvest forecast and revised the area sown to barley, peas, corn, oats and millet.
Next we have agricultural price moves.
Chicago soybeans slid for a third consecutive session on Thursday, weighed down by expectations of a bumper U.S. harvest with rains forecast in key growing regions. Corn fell for a second time in 3 sessions while wheat lost ground on slowing demand for grains. The most active soybean contract on the Chicago Board of Trade had lost 0.3% to $8.76 a bushel by 10:52 GMT, after closing down 0.3% on Wednesday. Corn gave up 0.2% to stand at $3.22 minus 1/2 a bushel and wheat slid 0.9% to $5.06 minus 1/4 a bushel.
We will now take a look at energy price moves.
Oil prices slipped off 5-month highs on Thursday, as bearish sentiment about fuel demand undermined support from a weak dollar and falling U.S. crude inventories. Brent crude fell 23 cents to $44.94 a barrel by 1100 GMT, while U.S. crude was down 48 cents at $41.71, breaking a 4-day streak of gains.
Moving on to metal price moves.
Copper prices drifted lower on Thursday as investors questioned whether demand would improve enough to extend a rally beyond 2-year highs reached last month. The metal used in power and construction rebounded from a low of $4,371 a ton in March to a high of $6,633 in July as China, the biggest consumer, unwound coronavirus lockdowns. But since then prices have moved sideways. Benchmark copper on the London Metal Exchange was at $6,451 a ton at 10:50 GMT, down 0.7%. LME aluminium was down 0.3% at $1,761 a ton, zinc fell 0.7% to $2,391.50, nickel rose 0.2% to $14,450, lead added 0.1% to $1,934 and tin was unchanged at $17,880.
Finally, we have the most recent news on the financial market.
The dollar gained as appetite for risk dwindled in London early on Thursday, as markets waited for U.S. jobs data and updates about fiscal aid negotiations in Washington. The dollar fell against a basket of currencies in overnight trading, reaching a two-year low of 92.495 at 0608 GMT, then picking up by 0700 GMT to trade 0.1% lower on the day at 92.713. Risk appetite had grown on Wednesday after ISM data in the United States new service industry orders jumped to a record high. But the data also showed that hiring declined, suggesting a labor market recovery is faltering. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.